Hey everybody, and welcome to this edition of Uncle Gary. In this episode, I'm going to be covering off the Canadian housing market, and if you're in Canada, whether you should be buying a home, considering buying a home, or not buying a home at this time. So please go ahead and like and subscribe to this channel, and if you know someone that would benefit from this information, please click the share button, copy the link, and either text it to them or email it to them so that you can have that conversation with them. The intention behind this request is so that we all level up our game and more people are able to be successful in financially achieving their goals, especially in this day and age when it's really challenging to do so. So that's my request. It doesn't cost you anything, but it does really help out with the algorithms from YouTube, and it does make a difference to the people that you send it to. I promise you, if you send this video to someone and ask them what they thought, you'll strike up a conversation and you'll discover something when you have that conversation with them. So that's my request. Please go ahead, like, subscribe, and share this video. It does make a difference for everyone involved. With that, let's go ahead and jump right in. In this video, I'm going to cover off the question I get asked a lot by people that I talk to, some of my mentees and some of the people that I coach, and they ask me, how can I afford a house? It's really expensive right now and I'd really like to buy a house. Or maybe I want to upgrade to a new house, but it's really expensive, or I'm living in a condo. How do I move to a house? Or frankly, I'm new to Canada. How do I even consider buying a house when they're so expensive? Well, this is what I'm going to answer in this video. So in short, I'm going to give you the short answer in summary about why it's a really good idea to buy into the property market, even now as things are expensive. And then I'm going to give you what I call the Uncle Gary points, where we're going to go a layer deeper and give you some straight talk about what's really happening and things you need to watch out for. So, short answer, absolutely you should be buying into the housing market. It is a fantastic time to get into the property market. I'm going to show you a few things that will show you why I say that, and then you can make up your own mind. But if you can find a housing situation or setup, be that single family home, double story, multi-family unit, whatever, or a condo, whatever works for you, if you can find a deal that you can afford and that a deal makes sense for you in the numbers, then absolutely go ahead and buy. It's a great time. Canada's a great country. You're in great shape if you do that. But there's the conundrum. It's not as simple as it sounds because it's extremely expensive to buy property right now. So let me go ahead and show you a little bit about what you might hear if you speak to a realtor. I have a number of realtor friends and I talk to them regularly about what they think is happening in the market. I talk to some mortgage brokers regularly as well. So let me show you the first piece about what's actually happening in Canada and why it's important. So if we switch over to this slide, this is the residential prices of Canadian homes across Canada. So this is not specific to one province or town. It's completely aggregated across all of Canada. And what we see is that prices have been rising since January 2005, probably even well before that. And they've been going up fairly steadily all the way up to where the average house price is now above $600,000 for a home in Canada. In the urban areas that are densely populated, you know, your Montreals, your Vancouvers, your Calgarys, your Torontos, it's going to be even higher than that. So in Toronto, where I'm based, the average house price has just recently hit $1 million. That is the average, not the lowest, the average home price. So there are ones that are more expensive than that, and then there are a few that are cheaper. Traditionally, the cheaper ones are condos. So that's what most people are going to tell you. Prices go up with property. So if you can buy it, why wouldn't you? I'm going to go one step further and actually show you another graph here, which shows the residential sales activity and how it is absolutely going crazy in the market. What you see here is that traditionally the Canadian market idles at about 475,000 sales per year or transactions per year. This is an annualized view. So although it's showing it in quarters, it's actually annualized. So what it's showing is how many house transactions or home transactions took place in the residential market. And then you can see here in 2020 in the second quarter, we saw a sharp decrease as everyone was to stay at home and we were susceptible to lockdown orders. And then as soon as they lightened up and people started to get accustomed to being at home, all of a sudden house transactions went through the ceiling and we're now at above 600,000 transactions annualized per year. That is a very, very high number of transactions. So the market is going crazy. It is at a very, very strong clip. To give you one last piece, a financial calculation that actually indicates why it's so valuable, let's assume you're in Toronto and you're going to buy a house, the average house, which is now about $1 million, and you put down the required deposit of 20%, so that would be a $200,000 deposit. If you put down $200,000 and the price of property is going up at, let's say, 7% a year, which has been a safe assumption to say, some years more, some years about 7%, but we'll take the low bar of 7%. If you put down a $1 million home, the necessary deposit, and you bought it, if you waited 1 year, your property would have gone up 7%, so it would be $1,070,000 would be the value of your property after 1 year. If you took what that return would look like, basically, instead of looking at it as a 7% increase in price, if you took the $70,000 that you would make if you sold it at that point, and you divided it by how much money you had to put in, the $200,000 that had to come out of your pocket, that is about a 35% return. So the rest of the money, the 80% that you would mortgage, is coming from the bank, and you do have to pay that off. But the amount you had to invest was only $200,000 for that home. So a $200,000 investment with a $70,000 return for each year, and it would go up if you compounded that, is a 35% return. There are very, very few hard assets that you can get that kind of return on in this day and age. That is an enormous return. So that's why there's so many people investing in property. And that brings me to my first point. We're in something of a bit of a conundrum here, because people who want to buy a home to live in it are also competing with houses for investors who are looking for that juicy 35% return. That's a real challenge, because home buying and investing are not for the same purpose. So there is a lot of contention in the market. This is driving up prices very, very aggressively. It's part of why the value of the properties is going up so much. They make for a great investment. So let's talk now about what we're not going to hear publicly spoken about, or the actual issues in the market. Not many people are going to be having this conversation with you, but that's the purpose of an Uncle Gary video. So what you're not going to hear a lot about is that many people who can afford a house already have one, and they're going to buy another one using either the home equity line of credit that they'll borrow against, they'll take some money based on the existing home they own, and they will put it into the deposit of a new house. So they will start to roll money over, which is something people do in Canada a lot. Or you're going to see wealthy people basically able to afford buying houses. They've paid off their house already. They've already got a cottage or something. So effectively, the wealthy are going to get wealthier. The challenge is that people who do not already have a home are now being priced out of the market. Young people, immigrants, people that never got a home of their own, and they just, they never were able to economically afford it, are now looking at a situation where they may never be able to economically afford a house. They're becoming unaffordable. Now, there's nothing wrong with renting, and a lot of people will rent, as many countries have a rental economy and a rental community that where you can rent for your entire life. We have been kind of taught in the culture that, you don't want to pay rent to someone else, landlords, all of that, the story about renting is not good. Maybe it is and maybe it isn't. But the point I'm making here is it is getting incredibly difficult to afford a house or a home you can call your own. That is a real conundrum for people who want to buy. So the next point inside of that is what we're actually seeing is causing prices to rise even more rapidly is, let me show you another graph. If we look at this graph over here, this is the residential market balance. Now what that means is this is how many houses are available, or homes or residential transactions are available if the current rate of sales were to continue as it stands now. So what it means is how much stock is on the market. If everyone was buying and selling houses at the rate they are now, how long before we would run out of stock of houses being available? So everyone who lists their house on the market for sale, everyone who is thinking of selling that puts their house on the market with a realtor, that's the number of houses available for sale, new listings we call them, and the number of months of inventory is the amount of new listings divided by the rate of sales. So how long would the current inventory last? And if you look at this graph, what you'll see is the blue bars are now showing that in the mid part of 2020, there was a big spike as everyone put their houses on the market and they wanted to basically move to larger places, cottages, places with backyards, gardens, swimming pools, and so on. So they listed their houses, and the houses got snatched up as anyone that was thinking of selling sold. And now we're seeing in this time frame over here, the last month, December of 2020 and January of 2021, we barely have 1.5 months of stock left on the market. What that means is there's so little supply of houses. So in terms of demand and supply, what you're seeing here is the sales to new listings ratio. 80% of sales are happening at the sales to new listing ratio is above 75%. That is very, very high. It's never been that high in the time that we've been watching this market. So it's a very, very turbulent time. Now, why am I telling you all of this? Well, the interesting part about all of this is that if you wanted to buy a house, then a number of available houses is very, very small, or homes or condos even. The available supply is very constrained. So whether the value of the property is good, bad, or indifferent doesn't really matter, because the demand and supply equation is being stretched. There is enormous demand for houses and very little supply. And whenever you have high demand and very low supply, it's going to push the price up because people will want to bid. So my invitation to you is reach out to a realtor. I can put the names of some realtors in the comments section so that you can see who I talk to and who I've dealt with in the past. And what they've told me when I've asked them, they've mentioned how they're battling to find their customers a home. So what that looks like is someone comes to them and says, we're ready to buy, we can afford it, let's go and look for a house or a condo. And when they go and put in an offer, there are 8, 9, 10 other offers, all offering over the asking price. And the buyers can't get a home. There's not enough stock on the market. That is really, really serious. We're unable to fulfill the demand or fill the demand that is being pushed on the market with the amount of supply that's available. So let's go into in the next point, which is a lot of people say that are houses more expensive and still becoming valuable, but condos, given that we're now working from home more than we've ever before, and we're going to be moving out of downtown cores and offices, and people aren't going to work in offices anymore, does that mean condos won't be valuable? Well, here's the Uncle Gary story. I believe, and I'll even refer to a graph to prove what I'm saying to you, I believe that there will be no decrease in condo prices. And I'll tell you why I'm going to say that just after we look at what this graph is telling us. This graph is showing us a number of lines. There are 5 lines in total. Each one of the color lines, green, red, orange, and purple, is showing you a different type of house or home. So a 1-story single family unit, a 2-story single family unit, a townhouse or a row house, and finally apartments. And the black thick line is the composite of all of them. Now, what we're seeing is they've all been increasing. The condo purple line over here seemed to be flattening out a little bit. It wasn't sure what it was going to do over there. But the important point to note here is as the other houses and homes and row houses all go up in price, the reason I'm confident in the condo market continuing to rise is because it is the cheapest one available. People do not have any other choices. If you don't have enough money to buy a house, you're ultimately going to end up either having to buy very, very, very far away, or you're going to have to buy a condo. And with Canada in particular, we have a very interesting situation in that it is a very hot destination for immigration. And the value of that is anytime you want more people to buy up the condo market, if there's an oversupply, we can just bring in a few more immigrants who will buy up that supply as they look to buy a home and can't afford houses. So regardless of whether people go back to downtown offices or not, they may not, we can work from home. But the point is, if you're trying to afford a home, you won't have that many choices if you don't have a lot of money at your disposal. And that brings me to my third point, which is what is going to happen when the younger generation who's coming into the workforce are going to expect to buy a home and are unable to afford it. There are very few people I know that can afford an average $1 million home because it requires a $200,000 deposit in order to qualify for a straight mortgage before you have to buy insurance through the Canadian Mortgage Housing Corporation, CMHC. That insurance eats into how much you have to pay every month, so you're able to afford less of a house. So the more house you want to afford, the more you want to put down 20% so that you don't have to write that insurance, because that insurance goes for the life of your mortgage. If it's a 25 or 30-year mortgage, even 20-year mortgage, it goes for the entire duration of the mortgage. That's a very serious part of that calculation. So the final point I'm going to leave you with here is the younger generation is going to battle to afford a home of their own. They may end up being a rental generation. Now, again, nothing right or wrong, but we've all told everyone in society that a mark of success and a mark of achieving your goals is to own a home. We've made it part of our economic model to own a home. The picket fence and the dog and the spouse and the kids and so on. That's really a dream that many people have. And now that dream is becoming potentially a myth, not a reality. So that brings me to my final point is, will interest rates go up or down? And this is a key point because a lot of people don't realize interest rates are extremely low and they may even go lower. I've talked about this before on my channel. It's not that I'm excited by low interest rates per se, but I don't think they can go up. They're literally unable to go up. And I'll tell you what I mean by that. If interest rates go up, everyone who's bought these expensive homes or who's mortgaged themselves heavily is going to have to pay more in their interest payments, and their mortgage payments may go up. And if that happens, they may not be able to afford their house or their cottage or the third house or fourth house that they've bought. So what that looks like is they will need to start selling off some of their houses if interest rates go up. And when people sell houses, it will increase the supply on the market, which will lower the price of all the houses. Now, if you're a new entrant to the market, you're thinking, great, I'd love that, let's do it. But for the rest of the economy, everybody who's bought a house has basically done the transaction against a mortgage, which has what's called a loan to value ratio. Now, the banks have to keep the loan to value within certain rules and guidelines. Now, loan to value is how much money was loaned against the property divided by the value of the property. It has to stay within a certain range. That's what I meant by a 20% deposit. If you exceed 80% loan to value, you have to go and take additional measures like take out insurance or don't give the loan. So if we see prices of property come down because interest rates went up, the problem with that is the banks are all going to then have to re-look at the calculation they ran for their loan to value. And that's going to flip that calculation into an unattractive state for the banks. And I just don't see that happening anytime soon. They don't want that to happen. The Bank of Canada doesn't want that to happen. Basically, the government can't tolerate that happening. And lastly, even in a local sense, even the cities and the city of Toronto tax base is based on the value of your home. If house prices start to fall and consistently do that because of higher interest rates, that means they would start assessing your tax rate against a lower value of your property and your taxes would go down. I don't know any city or governmental organization that's looking for how to have a lower tax base from which to work. So I just don't see that happening myself personally. And so that brings me to the end of this video. And here's the point. I'm going to tell you what I'm thinking the value of this for you could be. The first thing is like and subscribe and share the video. This is an important conversation. We are introducing a generation that potentially is unable to afford a home. That is a very serious situation. This is no laughing matter. This is an Uncle Gary moment. I'm being straight with you because I think you deserve it. I care about your success. I live in a community and I want to see that community thrive. I don't think that having very few very wealthy people and everyone else struggling to pay their bills and almost out of work and unable to afford a home is a viable or a pleasurable way to have a community or a society thrive. So that's my intention here. What I'm telling you the answer to this is, or the point of this, is if you can get into a house and afford to buy one, best go ahead and do that. I don't think they're going to be coming down for any, seasonable period of time. The other piece about this, you may need to start considering more inventive and interesting ways to look at how you afford a home. That might mean looking to your parents if they're wealthy enough, or if you're lucky enough to have parents that can support you with part of the deposit or all of the deposit, or if you've got parents who potentially have left you money when they pass away and you're able to use that money, that would be an important benefit to you. If you don't have that, immigrants, young people, people who just never had that kind of wealth in their background, in their family, my suggestion to you is look to see if you can find a house where multiple of you could go in and try and buy the house as a group. And that would mean, maybe one of you lives in the basement, one of you lives on the main floor, you live on the top floor, and you just work it basically so that you're able to get into the housing market and get a foothold. Because if you don't, there won't be I don't see a time for the foreseeable future, for the next at least 5 years, where you'll be able to start affording a house. So that's the point of why I'm telling you this. The last piece is the bidding wars are going to continue for the foreseeable future. We are not building houses fast enough. It's too difficult to have a new housing start get up and going quickly. So we're going to see these bully offers and really, really very high offer over asking situations. And it's going to make it incredibly difficult for new buyers to break into the market. And even the condo market, with all of the supply, just where I live in downtown Toronto, there are comfortably about 5,000 new units coming online or available online in the next year to 2 years. So it's an enormous number of available units, and that is potentially the last stop before it's going to be so expensive buying something. It'll be like New York expensive or London, England. It's just going to be unbelievably expensive and not something most people can afford to do. So that's the point of what I've told you, why I've told you all of these items. If you got value from this, or you think that there's a differing perspective that you'd like to offer, please go ahead and leave a comment down below. This is going to be part of a curriculum or a syllabus that I'm going to create as a playlist that will talk about what should young people do. A lot of people have asked me the question, Uncle Gary, if you were going to start again now, if you were in your early 20s, what would you do to be successful, to become financially successful, or heaven forbid, financially independent in this day and age? How is that even possible? So that's why I made this video. As always, I'm really, really interested to hear what you got from this video. Leave a comment, like and subscribe, and I look forward to catching you on the next one. Thank you for staying all the way to the end, and I'm looking forward to hearing what you thought.